Hey everyone, welcome back to the Dividend Waterfall channel. So if you looked at today's news, I guess they're having some trade deal issues again, and the market's been dropping. And anytime I see the market dropping on news like this and it panics and loses 500 points or so, think back to the very first time I bought stock. Days like this remind me when I first bought my stock. It was about 10 years ago, and it was right around the beginning of 2009, and the market was like in complete crash mode. I was working a job, and my one coworker, he was older, he was in his late 30s, early 40s, and mentioned something about, oh man, I'm taking a beating in the stock market, but I'm buying more. And me being naive and dumb and young, and I said, well, what are you, stupid? Don't you watch the news? Everybody's telling, everybody in the media is telling you need to sell your stocks. The market's crashing. And he looked at me, he said, yeah, that's the time you want to buy. He said, usually if you do the opposite of what the news tells you, you'll do all right in investing. And I kind of, laughed about it and started thinking about it, and I got home and I was just thinking, I'm like, what, he's right. Usually by the time everybody's freaking out, that is about the time to buy. So I didn't know anything about stock. I always thought it was the rich people who owned them. My parents were very middle class. My old man worked for the post office, and I don't think he had any stocks. He didn't know any, he didn't know anything to teach me about them. I know that. Investment tools that or investment things that he's ever bought that I knew of is I knew he'd buy treasury bonds, but we never talked about stocks or investments or anything in my house growing up. And so it was, like I said, it was just the beginning of 2009. So I had like maybe $1,000 or $1,200 coming back from a refund check. I wasn't making much money at the time, and I said, I'm going to put this money in the stock market and see what I can do. So at the time, I sold Ford vehicles for a while, probably like a year or two before this happened, and my girlfriend was working for Ford, and she had just gotten laid off. So I knew a little bit about the company. I mean, she had worked there. I had sold vehicles for the dealership, and I liked their product. So I was like, I really wouldn't mind owning some Ford stock. At the time, it was like $2 a share. Actually, it was under $2 a share. So I was like, I'll put $1,200 in and see what happens. Well, setting up a new account, it took maybe a week or so for the money to clear, and I mean, this was still not a lot of average people were investing online. It was still somewhat new. I mean, people were doing it, but not people I hung around. And by the time my money got through, it was like $3.50, almost $4 a share. So I bought it all. I bought $1,200 worth. I can't even remember how many shares it was. Then it started going up, and it hit about like $6. I think it was like $6. So me being naive and not knowing anything about stock, I cashed out and said, all right, on to the next thing. Man, if I'd have kept that position and held it all these years, especially Ford wasn't selling, they didn't have dividends at that time. They were going through that whole they didn't get the bailout, but all the other ones were getting bailouts. So they cut their dividend and everything. But if I'd have held on to that and collected all those dividends once they start paying, man, I'd have been in a lot better position. But I sold out around 6, and which took me to the quickest best pick, you'd say, the quickest gain I ever made in the stock market, especially for being brand new. Like I said, I didn't know anything about stocks. I didn't know anything about earnings. I didn't know what P meant, what market caps. I didn't even know about dividends. But what I was looking for was I wanted to get a lot of shares for the amount of money I had. I think I had like, I doubled my money. I was like sitting like a little bit over $2,000, and I put a portion of my money into a pharmaceutical stock called Vanda. I didn't know anything about it. I just knew I could get it for 98 cents a share, and I was excited because I'd get a bunch of shares. And I think I got like, I got 1,000 shares of it. And next day, stock really didn't do much. It almost went up to $1. And me being brand new and impatient and wanting action, I was thinking about selling it. I'm like, you know what? I'll let it ride for another day or two. And I was, working, so I didn't really. There was no smartphones or anything, so you actually had to log onto a computer. And I went back to work and just left it alone. Next day, thank God I didn't sell. The FDA approved one of their drugs, and it went over $15 a share. I know on the chart, if you look at it now, it doesn't show it, but it definitely spiked over 15 because I sold around 15, and 15 times my money. Now I'm really starting to like this stock market game. Now I'm thinking, I can quit my job. This is easy. I don't know why I wasn't doing this before. I mean, I'm going to be loaded. And I forget what else I had bought, but it went up too. And I mean, everything was going up. I had caught the bottom of the market, the absolute bottom of the market, and it was starting to go back up. And I was like, man, this is easy. I'm just going to quit my job and trade stock. And so now I'm sitting like 20 grand in a matter of maybe a month, maybe two. I mean, I turned like $1,200 into 20 grand, and I'm excited. Oh, am I excited? So I'm like, well, if I made this money this quick on $1 stock, imagine what I could do if I bought a penny stock, and not a penny stock, sub penny stock. Well, you know where this is going. I lost pretty much all of it. I mean, I kept the. It was quick too. I lost it so quick, and I still had the 12, my original investment. I think I was down to like $1,400. But I still to this day look at it as it was a $20,000 lesson, and it taught me never to play the pennies or the sub pennies. So after that, I was like, you know what? I actually kind of left it alone for a while, and I started getting into precious metals. And I still think gold and silver are undervalued, and I'm still a big believer in precious metals. I bought precious metals, and they ran, and I think it was 2011. They ran up, and of course I didn't sell. I bought all the way up, bought all the way down. I've still been buying. I still think they're undervalued, and I mean, it's a small portion of my portfolio, maybe 10%, but I was buying those, and I realized precious metals are nice and everything, but you're not making money off them. It's kind of like you're just holding it, waiting for them to go up. Actually, I use it as like a safety. It's just like insurance in case everything would fall apart. You got something of intrinsic value. But I started learning about stocks. I didn't know, and started reading books about them, and I learned about index funds and why it's wiser to put your money into a 401k and Roth first and fully fund those before you invest in the open market, because taxes just destroy you. I started learning about dividends, and I learned that dividends make up most of your gains in the markets. I mean, don't get me wrong. There's those tech stocks that fly high and stuff, but the majority, and I forget where I read it, but it was like, I think it's like 60-70% of the gains in the stock market are from dividends. So that's why I got interested in dividends, and I still have mostly index funds, because what I what I learned, what I've read is a lot of some of your best gains are from your index funds, because it's hard to beat the market, and your experts don't consistently beat the market. And sometimes you're better off just getting the nose. I also learned about, don't panic on days like this. Just dollar cost average. Big down days give you an opportunity to get better prices, and just think the lower that price goes, if you're buying reliable stock and good dividend paying stocks, the lower that price goes, the better your yield you're getting. Don't go all in at once. Dollar cost average down. Buy a little bit at a time. I bought some on Monday, and when I heard the news about the trade deal, I seen it was Sunday night, the market was already starting, and after hours was already starting to go down. So I put a small position in. I put another $250 in, and if it looks like it's gonna be going down tomorrow, I'll buy some more and just keep buying a little bit at a time and getting those better yields. And another thing I learned, don't look for low priced cheap stock. I'm not talking valued cheap stock. I'm talking like just because it's a cheap price. There's usually a reason why stock are cheap, and it's usually not a good reason. I mean, every once in a while the market's wrong, but those expensive stock that when I first started, I was like, man, why would that's so expensive? There's a reason it's expensive. You're basically buying the insurance, the premium that it holds, because it is a reliable stock. It doesn't. They still pay a dividend when times are bad, and they've been through market crashes before. They have a proven track record. So that's why some of those expensive stocks are expensive. I mean, I think everything's expensive right now. The whole market's kind of expensive, but I mean that's just a different story for here, for another time. But I'm like I said, I'm far from an expert. I'm just an average guy who a blue collar working class guy who read some books, and I'm doing my own thing. Don't do what I do. Do your own research. Some books that taught me about investing were obviously you start with stock investing for dummies. A little book of Common Sense by John Bogle. He's who started Vanguard and index funds, and I'm a big believer in index funds too, especially index funds that hold dividend paying stocks. Even the S&P holds a lot of dividend paying stocks. What else? Another one, a millionaire teacher. I think it's like 9 things they didn't teach you in school or something. It's a pretty good book. It was basically a teacher who bought index funds and just put money in consistently and became a millionaire. And it kind of proved to you like that, you don't have to have a huge income to become a millionaire. It's just about a little bit of a little bit every month. Just quit spending more than you make and just invest it. And it's a long-term game. Another book was Get Rich with Dividends. That was another book I liked, and it taught me about what to look for, and look at their payout ratios, and which stock, look for the dividend aristocrats, dividend kings, dividend champions, stuff like that. Just remember, the news, they like to scare people, and markets go up, markets go down. Even if you look at look at 2008. Pull up any stock chart. Look at 2008. If you had bought at the very top of the market, and the next day it started going down, even if you didn't keep buying in, as long as you had a diversified portfolio with a bunch of different companies, of reliable companies. I'm not talking about just all tech stocks, but if you had a broad sector of everything, and you look at a chart, you're still well ahead of what it was at the top of the market last time. And this market's going to crash again. They always do, but they always come back bigger. I mean, you pull out a long-term chart on the stock on the market, And you look at these huge crashes they talk about, and they look like little blips when you pull it out in the long run. It's a long-term game. It's not get rich quick, it's get rich slow. I mean, that it's just a different way of investing. There's people who like the fast in and out, and I mess around with that, but to me, I look at that as gambling. To me, investing is you buy companies you want to hold forever. And that's what I've learned so far, the 10 years or so that I've been investing. And obviously I haven't been investing through a downturn, but I'm still going to keep adding. I kind of hope it does go down for a while, because I'm going to keep buying on the way down, and I still got another 20-30 years of investing at least. And I'll just keep buying stock cheaper. So I'm not looking to sell them. I'm looking to hold. I'm also gonna probably start buying some more bonds. I've been very aggressive these past couple of years, and I think I'm gonna probably get some bonds too, just to add a little more security. And that's probably what my next step is. I'm still going to be buying the stock, but I'm going to add a small position of bonds too, just to kind of level things out. But that's what I've learned so far, and like I said, I'm not an expert, and I'm learning as I go, and I learn from watching your guys' videos too. And anyways, appreciate you listening to me ramble, and you guys have a good one.